Yo, what the fuck is going on? Professor Pip is back in the building. Coming and drop y'all another video on this. This ain't the necessarily weekend analysis, but what I'm coming in and do right now is just kind of how show how I went back to reflect and kind of tried to check myself for the most part because I saw I was in a losing streak. I wasn't happy with that losing streak. So I had to go back and check my strategy. I'm like, what in the is going on? Why am I all of a sudden losing back to 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 back consistent trades? And it's like shit was frustrating, bro. You going through the market, you know you done study, you know you done plan, you know you done prep, you know you done put in that time, put in that work and that energy, and your motherfucking strategy ain't playing out, make you want to snap. And you want to snap. So what I did was, you know, slow down a little bit. I said, fuck it, I ain't trading no more the week. I'm tired of giving these boys my money. They clapping me left and right. Stop loss is taking it full. So what I'm gonna do is go back and check and see why am I going wrong and why am I not catching these trades like I should be catching these trades and why is my psychology thrown? What I did was I went all the way back to my weekly chart. I went all the way back to the weekly chart. Excuse me. I went back to see, okay, what am I missing? Where the fuck is this market trying to go? And why can I not catch the bus? You know what I'm saying? What I remember was, and this wasn't about until what I remember was about 30. I was like, I remember when I did my weekend analysis a couple of weeks ago, I said I identified on a weekly chart a potential double bottom with a liquidity grab and a lower high produced after that. So psychologically, when you think about the market and how it moves and things that go on with the market, you see a double top, you should probably be looking for what, if you know how to trade, if you've been in the game a little bit, you study patterns and price action, you know how the market moves. You see a double top at a crucial level, you should be looking for what? Some motherfucking shorts. So I said, oh, okay. So what I'm gonna do is go back and see where, I should have been potentially looking for shorts throughout the whole week. The market could have been bullish on some intraday time frames, during certain sessions. And yeah, it's okay to take scout buys during those sessions if you know what you're looking for, you know what your targets are. But those are risky. You potentially stand a chance of getting your ass clapped or the market just reversing on you because there's no guarantees that the momentum or your probabilities are going to be high enough for the market to take you where you're trying to go or where you're trying to be. So for the most part, based off of that double top with a lower high produce psychology, I should have been looking for the shorts and just waiting for the prime opportunity on catching them shorts. And then I'm gonna try and replay the video that I had. I found my 2 week ago analysis. I'm gonna play it and see if you can hear it. This is on GJ. All right. So from that psychological standpoint, from that analysis, I should have been ready and saying, okay, cool. And identified my double top against structure or at a key level, key area in the market. This back in over here is what we call them key level, key area of the market. Price tried to push back higher, came down, downtrend. Tried to push higher from here, couldn't make it, came down, broke the low. Tried to push higher from here, couldn't make it, came down. Tried to break the high one more again, and it didn't make it. It didn't happen. It was unsuccessful, and then the market just tanked from there. You get back in over here, you pretty much in that same similar area. Price tried to push up, push up, push up. Wasn't happening. Double top with a lower high on the weekly time frame. That is extremely valuable when you talk about chart patterns and confluences. Is the higher time frame you see that pattern and confluence on, the higher the probability of that market potentially going in the favor that you know that chart pattern to play out in. So like I was saying, double chart with liquidity grab to the downside. I should have been expecting the shorts. So once I went back and analyzed, I said, okay, yeah, I remember that double chart. So I should have been looking for the short. So when I remarked this market up, what I'm gonna do is I'm gonna just play it because it was Thursday at this time, so price action hadn't already played out, and I'd already seen what the market did. I'm gonna mark my previous lower high, since we were going short, and then I'm gonna mark the low that was created from the lower high, which is the gray boxes on the daily trend. We obviously bearish. So when you go down to the 4 hour, what could I see on the 4 hour? It's kind of hard and jumped up right now. You can't really see much, but let's go back. Okay, so this was the lower high area that sent you into the lows. What the price opened up at? Okay, so price action pretty much for the most part when you bar replay it was like this right here. So the previous week's analysis would have said this was the extreme high, this was the extreme low, and we waiting to see what price action was going to give us. When you hit the next bar, and this is on the 4 hour chart. Let me see. Yeah, okay. So price action opened up and it created a gap. This is on Sunday's time. This is on Sunday, last week Sunday. I should have been looking for the shorts in the first place because price action was bearish. Even though we can't really see necessarily what's going to happen yet, at market open, we don't know what the market's going to play out. If it's going to go bullish or bearish. We should have, the bias, I kind of should have been expecting, or the psychology behind my setup should have been, okay, the market's already bearish on the weekly, market is bearish on the daily. We saw the double top, lower high formation on the weekly, strong confluence. So let's mentally be prepared to take shorts. But if the bulls, start breaking areas within the market, which potentially would have had to be way back up here, then we can confidently say any higher low appropriate stop loss, we can get active to the top side. So yeah, so hit that play button. This is on a 4 hour chart. So the market gap, I did see the gap. I was actually creating this. I was creating last week's weekly market analysis, and I was still going over AU. And I saw a big ass gap within the market. So this trade right here, this buy, when you go down to the 15-minute, I actually did catch this buy. Once price came down and respected this support, I took this buy all the way back up to this Asian high and captured all those pips. But after that point, it was not looking good for you, Brett. It wasn't good. And I was getting my ass ate up. But what I kind of was looking at for the most part, when you go back on the 1 hour chart, I was looking for this order block here to get hit before the market going back down. So I was expecting this price action coming back up to be all corrective price action. So what the plan was to try and find areas in the markets where I could take scalp buys back into this level, if not this area, and catch some long positions on. That didn't happen. That didn't work out. I should have adapted earlier, but I didn't. So I didn't adapt till about Thursday, I had stopped trading by that point. So this is the reanalyzation that I did on Thursday to see why I was getting clapped and why no trades was working out. The first thing I should have identified was this breaker structure. You got the high, you got the low, you got the higher high. From this point, we should be looking for a higher low to get active, to push back into this order block. That should have been the first confirmation that I should have said to myself, I want to see a higher low created, and then potentially once that higher low created at this level or down at this level, we could potentially see buys back into that order block or to the most extreme point from 2 weeks ago. I didn't get that. I got this big ass gap, and then I caught that one buy. So once I caught this buy, I was like, oh, hell yeah, it's on. We put us all the way back into that order block for the whole week. Let's get active. So I caught this buy, and then I went to bed. Okay. This next Asian session right over here will be Monday's price action. So, but what I should have did was adjust and adapt, especially um like I said, from the higher time frames with that double top and double top lower high formation. I should have been saying, okay, yeah, even though we did catch this buy, what we're gonna do is not go back to the original plan of looking for the shorts. And had I done that, then as we hit the play button, um, this area right here becomes important simply because price came down on these lower time frames and it broke that potential lower high area that could have possibly created a lower high to push us higher. So I got the breaker structure in this red. I got this is the level, or you could have said this was the level that was the breaker structure from the higher time or the intraday time frames to kind of say that price not might be ready to push back bullish. It might not go back up to this hour level order block and then give you some action back to the downside. That might not be ready to play out. But in my mind, oh yeah, we're waiting for that 1 hour order block to get tapped just because. And I was mostly stuck on that because I'd seen it before. I'd seen price action. I'd seen price action come back and push after it drops correct all the way back into the order block and then drop again. So for the most part, I don't trade to London. So potentially these shorts for me would have been risky because it would have been outside of my trading time. My trading time is the Asian session. Sometimes I will take some shorts on the New York or take some trades, some setups on the New York session on AU, just because I know AU moves a little bit or moves a lot during the New York session. But for the most part, I'm analyzing where I could potentially take those New York session trades during the London session. During the Asian session. So if I would have stuck to the bias of looking for the shorts or identify areas where we could take shorts. What happened was we got the high, got the low, the higher high, no higher low, breaker structure, come back down. So then I should have been looking to say, okay, that big ass gap broke structure to the downside and then found some support way down here somewhere. So if price retraces from where that big ass gap initiated from and does not break these highs, this area now becomes crucially important and we could potentially take some shorts from there. I could say potentially because that is when your price action comes into play, your candlestick development comes into play and shows you that, hey, price has pushed up through there to that level, but the way the candles are producing or forming is showing you that we don't have enough orders, enough gas, enough momentum to push through that level and continue higher. So if I'd have been looking at this level, that's why you got this sell position right here was based off of this level here to say, okay, if we would have remained waiting for the shorts because of this breaker structure, we could get active from here instead of waiting for this area or this area back in over here. So when you hit that play button, price smoothly, strongly pushes into that level. Now, you watching this real time, your stomach probably bubbling because you're like, damn, that's a big ass candle. It didn't go for the hell out of that previous candle, that bearish candle that was there. I don't know if it's going to work out. But, if you are confident in your trading plan, if you're confident in how the candles produce and you see a certain type of setup / formation, and you're like, okay, well, I can hold this trade and just, continuously be wrong and then just wait for this level or that extreme level and then just be okay with this small loss. 30 pips, depending on how you could have took this setup, but based off how I would have took this setup, we would have 30 pips thought. And then the target would have been back to those lows that was created from that gap. So when you hit the play button, you sitting, you waiting. If you took it just off the whim of you should be looking for the shorts, that could have been your entry. If you was waiting for candle formations, then you ain't got no entry just yet. But as price go on, you kind of can see we pushed into that zone to the left. We pushed into a big bullish. Then we immediately closed back bearish on a 15-minute chart, and then the next candle broke the low of the previous bearish candle. And then what you had, price is now struggling to push higher, and instead of what we did back over here, breaking through resistance and respecting support, now coming from that level, we pushed into that level. We are now breaking supports and respecting resistances. So if you took the cowboy trade back in over here just because based off of that structure, or if I took the cowboy trade based off of this structure here because we broke the structure back over here. So based off of the weekly, that was the first confluence, the double top and the lower high. The second confluence is right here, the breaker structure. My third confluence was, or would have been, or should have been, or could have been pushing back into this level where that structure shift took place, and then getting back active, and then just trusting that, hey, I got three confluences we set up right. I can get active and get in here and get some money. And if I did, then this is what potentially would have played out for you, Brett. Having a sell limit set up to place during the London, because like I said, I ain't awake for the London. I got shit to do. I got other things going on. You know what I'm saying? So yeah. This trade right here, potentially, if I would have had it set up, you'd be looking at 7 pips drawdown and 4 TP 92 pips. Let's see if he gets hit. Bam! There it is. 92 pips. So as I slowed my mind down and said, okay, why am I losing? Why am I not having success I know I should have based off of the time I put in? Why am I not seeing the setups like I know I can? Why am I, partially not being patient? Why are things not working out in my favor? And it comes to a point when you're trading that you say, oh, you have to say, okay, what am I doing differently that I wasn't doing before? What changed? Why am I all of a sudden getting cooked when last week, you caught some decent trades, you had some great risk to rewards, you made a decent amount of money. And I feel like one of the things you kind of need to do is check yourself, which is what I did right here. And by checking myself, I deleted everything. I cut out all the noise. Even though the market was moving, I threw that bar replay on so I can say, okay, I'm gonna start from the weekly open. Go back to my higher time frames, see what I was looking at, see what I potentially missed now that it's Thursday, and see how I could have got active. So that could have been my second trade of the week, because I definitely took this trade and caught those buys and was profitable here. Cut off everything once I started seeing that candle. As this was retracing, I was expecting to see a reaction from this level. So as we came up and then failed to continue, or I saw this big ass wick, the wick bigger than the body, I was like, yeah, I'm out of there. I didn't hold on to that shit, mostly for a scalp, because I knew that gap now until that 10 was gonna be closed. And when I say closed, this is all the way up. This is closing off that gap. I didn't want to hold that long just because I wanted to secure profits. So as price action played out throughout the New York, throughout the London, 4 TP would have been hit on that one, 7 pip drawdown. And then we would have came back to the next day's Asia. So I would have saw that the previous area where price gap from came back and respected and dropped from there again. Now, looking at this big ass candle, or that wasn't really a candle, it was a gap. Looking at this, area right here of how price just dropped. Looking at this is now, it would seem sort of corrective price action to me, just because it's push, pull back, push, pull back, push, pull back. It's not necessarily just a straight flush. Like you got right here, straight flush. I don't really see too many more, but yeah, like a straight flush. So right here, this looks like bearish momentum to me. This right here looks like this is where the market wants to go. It ain't having no issues breaking through supports. It's just dropping. This right over here look like it's having an issue going down, pulling back, going down, pulling back. So mentally, psychologically, going through this in live time, I would have probably considered this to be corrective price action. I don't know what the hell is correcting, but it looks corrective. So as we came back to the Asian session, I possibly could have been still guessing, hey, is this market going to continue bearishly or what? This would have been Monday night's Asian session, so the 28th Asian session, and just hitting the play button. What I initially would have been looking for was highs and lows to be created, and the way I potentially like to do it is I either will take a break and retest trade if I miss the initial highs and lows and see price break out one of the sides and then retest one of the highs or the lows, or I'll take it as, if we establish the low first, then create the high. If I take it for a 50% play from that, retrace 50% and then continuation. So with this price action being bullish, my thought process should have been still, hey, let's wait for the best short possible, the best selling scenario probability to play out. And looking at it from, as it played out, I don't necessarily know that I would have potentially caught a trade, because I didn't have my break and retest of either side just yet. This is now 11 going into 12 o'clock. So by this time, I probably would have been off the charts. And I don't see any areas, after this level already got tapped, I wouldn't necessarily expect the price to come all the way back up here to drop again. So at this point, I probably just jumped out to the higher time frames, meaning the 1 hour, 4 hour, just to see how price is formulating. And what I kind of can see going back into 2 weeks ago price action is it's kind of forming a channel to the downside, with the high, the low, the high back to the low. It may have touched the top of that channel one more time before dropping, but ain't no guarantees on that. So potentially Monday night, I would not probably have had a setup / trade to potentially get into. So by the time the London would have came, no, this would have took develop. Yeah, I wouldn't have been out. But as you can see, let's see if it actually happened. No, it did not happen. But yeah, so there was no break and retest trade of the Asian higher low. There was no 50% retracement trade to do continuation. Continuation here would have been bullishly. It didn't pull back 50% and continue higher. It didn't break out of either side. This, by the time the London happened, it did break the side, but it didn't, excuse me. It did not, let me see, where were we? Yeah, it did not fully, by the time it broke, it did not fully retest. I would have been looking for it to come all the way back up to that Asian low and retest, and it did not take place. So potentially Monday night, no trade. So what I do, my trading plan, let all the rest of that shit play out. That way I can kind of have some clear information as far as where price wants to go. And yeah, get active that way. So going into Tuesday night, what I would have seen or what I would have saw or, my eyes would have been looking out for back at the higher time frame was, okay, we just made this big ass drop. Where can we get active back to the downside potentially because the market is still bearish? Nothing in this market shows that we want to go bullish. And by seeing this right here, I've probably been looking for a 50% retracement of this impulse move to the downside. As you're going through the trading cycle, you see you got a high, low, lower, high, lower, low. So what do you expect to be created next? Let's wait for the lower high formation to create on the 4 hourly or hourly chart and then get active to the downside. Right here on the, my phone blowing up. Right here on the 4 hour chart, if you take the trading cycle high, low, lower, high, lower, low, potentially this could be enough range to say that that lower high has been created on the 4 hour. No confirmations yet. On the 1 hour, it don't look so well of a setup, so we potentially wait for more retracement. This would have been the first area looking for price action to stall out in, because you know how to read candles, price push down. You got this wick because price pulled back, created a resistance, and then dropped some more. So we will look for this, not a resistance. So what we will look for is price to push up back into this resistance that was created right here with this wick, and then drop from there. When you add the analysis back, you kind of can already see that was the idea. And then you see price push back into that resistance. On a 1 hour chart, you see it there. You got the Asian high as well. And then on the 15 minutes, let's go back to the hourly so we can identify it clearly. Dropping gems here. So if you're taking notes, please take the note, write them down, because you see this shit every day, all day. We'll identify this wick here with these little clips, and then drop to the 15 minutes. So you can see that area a lot better with that little candle right there. Like I said, price was dropping, it pulled back a little bit, and then it dropped some more. So when you line that up and look all the way across to the Asian session, price pulled right back to where that wick found resistance. And then that potentially would have been my entry. Now, just taking this based off the way I trade with the Asian highs and the Asian lows, this kind of would have been a risky setup just because I haven't seen all the things play out that I need to see play out. And so this potentially would have just been, cowboy trade, looking for a price, as it impulse pulled back, corrective price action, retesting the lows. That's the only psychology and mind thought process behind this trade. So this potentially could have been my third trade for the week. And as you can see, hitting that play button, it would have ran all the way to 2 o'clock in the morning. But at the end of the day, results are results, and you get to take profit hit. So potentially we had the trade on Sunday. This would have took place, Monday morning London session if I was looking for it. No trade Monday night Asian session, Tuesday night Asian session, 50% of the impulse move would have played out there. And then, yeah, you go into Wednesday morning's London session. Now, seeing that price is not able, or for the most part, you got the high, this is the low. What we should be thinking at this point on the higher time frames, price has created a high for the week and price has created a low for the week. So thought process / psychology should shift to what? When you're asking yourself, okay, so we made a high and we made a low and we downtrended. What should I be looking for next on the higher time frames? A lower high if we're gonna continue bearish. So price is now pushing up to do what? Potentially give you that lower high that you need to see on the higher time frames. You gotta remember, on the higher time frame, you're looking for a lower high on the 15-minute, 30-minute, you're gonna get your ass cooked. I'm telling you straight up. A lot of people ain't gonna tell you that. You know, if you trade in the trading cycle, lower lows and lower highs, and downtrend, higher highs and higher lows on the uptrend, you need to be looking from the top down. Check them out from the higher time frames to avoid, okay? Because if you're looking at it from the 15-minute, this right here, high, low, lower high that gave you the new low, you probably taking shorts from right here. And if you took a short from right here, look what happened. Price kept high, you got cooked. You wanna know how I know that happened? Because I took a short from right here because I didn't take my ass to the higher time frames to identify that this is the lower time frame, lower highs, intraday lower time, lower high. The probabilities of that trade playing out is not that high, and you're gonna get your ass cooked. You know, brokers are sitting back like, yeah, this motherfucker don't know how to trade at all. Give me them pips, give me your percentages and them stop losses, give me all that. And then you know what you're gonna do next. You're gonna be so upset. You say, okay, well, maybe it come back to the next level. And I'm gonna take a shot from up there. No, cooked, because it's lower time frame. We need scoop doodle back up to the higher time frames to see where we actually should be taking shorts from. Another thing that I've learned too, you know, I don't really trade trend lines. I don't really get in based off a trend line, but every now and again you will see a chart with a trend line on it of mine. And what I do with that is from the higher time frames, I'll establish the major trend. But when you see the trend established as far as hit that trend line, push down, come back to that trend line, push down. In order for this to be effective, every time we hit that trend line, we need to be creating, we need to be breaking structure and creating new structure. So high, low, lower, high, we need to be coming down, making lower lows. And when we pull away from that trend like that, I draw this inside trend of the new trend line that's been established so that I know that once price action has broken that first inside trend, it's automatically going back to that second second trend line, that initial trend line. And as you see with these blue lines here, you will see that this is the main or the initial trend. The two wicks right here, trend line drawn that way. And then the inside trend is going up more vertically. So once price action breaks this first trend line right here, it will come back to this blue trend line right here. How do I know that? I know that from experience. I know that from watching the charts and watching the markets and seeing how they move and just understand how they move. But I went out to my 4-hour chart and blanked all this. This was the lower high area that pushed us into the lows. I should have been waiting to see where price was going to act up. Now, with price action looking like this right here, this would have been kind of hard to try to determine where your lower high was going to come from. But at the same time, this is the highest point that pushed before, or this is the highest point where price pushed before we melted and broke these lows over here. So theoretically, you could just wait and see if we break this high, and then if we break this high, then potentially we're going back up that way. So yeah. When you add the analysis back, go back down to the lower time frame, this over here or somewhere over here was that high, which is the gray box. So we potentially should be waiting to see if price is going to break that gray box, or is it going to reject that gray box. Now, my trade was already taken for the day. This is Monday, this is Tuesday. This is Tuesday night Asian session. So at this point, I wouldn't have been looking for no trades anyway. So I would have missed all this. And that's why I like to just trade the Asian for the most part, because after I would have took my trade, I would have seen what the market wanted to do. It would have been back up here or shot down back down here before I was able to come back to the market. And then I would have known how to get active from that. So hit that play button, let the rest of this New York session play out. And then we back into the Asian session. So as I was away from the chart, doing my daily duties, doing whatever I was doing, I would have saw that price action created an intraday uptrend. The London session and the New York session continued bullishly. So at this point, my psychology should have been, let's see if we break the highs based off of the higher time frame, or if we start to come up here and liquidate these levels and then start going back lower. So I would have been looking and waiting for my Asian range to develop. And I would have said, okay, well, this looks like Asian low, potentially an Asian high. It is now 7:15. Market been open for 2 hours, 15 minutes. That little Asian high, Asian low area starting to range. Okay, boom, we got a breakout. Now, being a patient trader and creating that trading plan for that session of what specifically you want to look for is what's going to save your ass in these type of situations. Because if I traded the normal way I traded, just saying the break and retest of the Asian high, then potentially right now, because we just broke that Asian high, I potentially could have been looking for a break and retest trade to see if we was going to continue higher. So here's my break. Now I need a retest that stays above this Asian high point, and then continuation buy back into back into some of the highs. Looking left back over that way. And at this point, you got the break. This potentially could be a retest. Ooh, and you got a bullish. So potentially, I could have been in from a trade from right at this point, and then been up 19, 20 pips. 19, 20 pips, some people call that a day. And I'm saying potentially or could have, because I know we right at this level where price melted from before. So that would have been one of the things conflicting to make me not want to take the buys, because you could hit that area and immediately tank. Yeah, you up 19 pips, but you could immediately start to drop. But if I took the break and retest of the Asian high, I could have had 19 pip trade and called it a night. But from, this being 2020 high vision, I know I potentially should have been waiting for best probability short setups. And we're now in my session. And then, that's why I should have get active. So going along, looking to see and waiting, even if I did take this trade, I could have secured some positions back in at the beginning of this gray zone and just left a runner to see if it was going to continue to the highs, or I could just sit back and wait and see if price is going to reject this zone or just flat out break it all together. By this time, where price action is now, we're looking at about 2:30 in the morning. I am good and asleep. So at this point, if I took that break and retest trade, stops would have been at break even or even in profit, especially after this 19 pip push. And by the time I woke up, this is pretty much what I would have woke up to, looking at this on the 15-minute, it looked like price action tried to push above that level or the high on the higher time frames and started to come back down, no longer respecting supports, now breaking through supports and respecting resistances. And then as price continues, got to the New York session, it just started to melt again. But back like what I was trying to talk to, what I was speaking to before with these trend lines, if we break this first blue trend line, we coming back to the second initial trend line. And as you can see, as the sessions continue to play, there it is. You can find these type situations and scenarios all over the chart 24/7. This is not just picked out for this video. It happens all the time. That's how I knew how to draw it up. Same thing with this one. If I draw that orange line again, because price is pulling away from that trend line, so I draw an inside trend line. Going into next week, if that first trend line is broken, we're going back to that second trend line. But for the most part, what I would have saw was price action did not break that high. We went up there again and just melted back off, same way we did back in over here as we retested that high. So overall, my mind frame should have been, or at least the psychology should have been, let's wait for the highest probability shorts. Even though you might catch an intraday time frame, if you trade to London or New York, it is feasible to take longs within a downtrend, because the market ain't just gonna go in one direction for 2-3 days and then pull back for 2 or 3 days. No, it gives you these back and forth play motions to mess with your psychology and potentially say, okay, well, we gonna catch his ass. We gonna slap them stop losses. But as you go on and you continue, your experience within the market, you will see price just don't go on one straight line. It goes up, come down, goes up, come down, goes up, come down. And if you play this on out to the rest of the week, this is Monday, Tuesday, Wednesday, now Thursday. Thursday, I was not trading. This is the point where I was like, okay, I don't know what the hell going on. I need to go back and reanalyze and see why am I losing? And this is what I came up with at this point where price was at in the market, because at this point right here, I didn't know which way price is going. I did see we were bearish. I did see we tried to push up into this level and didn't make it. But at this time, I still didn't know which direction to take a trade in. And had I, listened to myself earlier from previous videos and just, had my psychology on point, I don't know, wait for the best short scenario. And on the 15-minute time frame, we got a break of the NY low with a potential retest of that Asian high. I could have been sitting and waiting for the shorts. Based off the higher time frames, we came back up and retested that area. We broke back down. So if we got the high, low, lower, low, equal lower high, we should be looking for a lower low. Intraday time frame, we just created a high, low, potential lower high. Oh, this is a lower high because we did break that low. So high, low, lower, low. We should be looking for that lower high formation down on the smaller time frames to push price lower. And once you hit that play button and add the analysis back, you can see what happened. We should be going to create a lower low right now. And there you got it in the London session. It closed. It's kind of funny looking, but it's still a lower low. And then by the end of the week, as you can see, on the lower time frames, we gave you the lower low. On the higher time frames, we gave you the lower low. Everywhere, we gave you the fucking lower low. That's what it is. That's what it should have been based off of that initial analysis 2 weeks ago. So that's all I got for this one. In a minute, I'm going to create my weekend analysis, show you what I see what I show you. Thanks for watching. Like and subscribe. If you're trying to get at me, leave a message in the comments, or you can hit me on social medias. I'm on Facebook, Telegram, Instagram. I don't really be on a lot of social media. I just come on here and I display this type of stuff, and then I peel out. I show my kids a little bit too, but that's a different story. But yeah, this is very helpful to me. I hope it's very helpful to you. It definitely showed me, hey, you know how to trade. You just need to slow the fuck down. You need to clear your head, analyze the charts deeply. Don't just, look at them and then like, oh yeah, I'm gonna go this way. Oh yeah, I'm gonna go this way. Oh yeah, no, take your time. Slow down. The money gonna come, but it's only gonna come when you take your time and show you what really, really, really going on. And this right here was an example of me slowing down and taking my time and see what the money really was gonna be. So potentially, I should have had 3 trades last week. Profitable. Potentially, could have took this one up here, so that would have been the 4th trade. And then I could have, but like I said, by this point in the market, I didn't know where price was going, so I was dead on that. But it is what it is. Holla at your boy. I'm out.